All right, jumping right into Progyny's Q3 2024 earnings call.
Yeah, lots of buzz already.
Absolutely, especially with those utilization trends.
Right, and remember, they're the leading fertility and family-building benefits provider.
Working with companies to offer these services to employees.
Huge reach, 468 clients.
Wow.
Covering 6.4 million lives, over 286 million in revenue this past quarter.
Those are some serious numbers.
Yeah, so the utilization rate is holding steady,
Yeah.
meaning how many members are actually using the benefit.
Okay.
Good sign, the demand is there.
That's what we like to see, consistent need.
Right, but here's where it gets interesting.
Okay.
Pace of treatment has slowed down.
So, what does that mean?
Like people are hitting pause on their fertility journey, taking longer to move from consultation to starting procedures. And the average number of cycles per person is down,
Interesting.
especially for egg freezing.
Wow. So why the slowdown? Cost? Clinics backed up?
Progyny says it's not due to reduced coverage or clinic backlogs.
Huh.
They're trying to figure it out.
Okay. Bit of a mystery then.
Yeah.
All right. Well, let's look at the numbers, see if we can get any insights.
Right.
What's the financial picture looking like?
So revenue came in at $286.6 million.
Okay.
2% increase year over year.
Not bad. But
Definitely a slower pace compared to before.
yeah, a bit of a cooling off.
Uh-huh.
Okay, what about profitability?
Gross profit actually took a hit, down 5% to $59.2 million.
Oh, okay.
Adjusted EBITDA also dropped 7% to $46.5 million.
All right, so not exactly the blockbuster quarter
Right.
net income.
Landed at $10.4 million or 11 cents per diluted share.
Okay, so some mixed signals here.
Yeah,
Growth slowing, profits down, but utilization steady.
exactly. And that's why this consumption trend is so puzzling. People
Oh.
still interested, but not using at the same rate.
Makes you wonder, what's going on behind the scenes?
Right.
Economic uncertainty, reevaluating family plans.
Maybe both.
Bit of both, yeah.
Analysts were definitely keen to explore this during the Q&A.
Of course.
Yeah.
Well, let's hear it. What were some of those key questions and concerns?
Well, Anne Samuel from JP Morgan, she jumped right in,
Okay.
asking about, how Progyny is getting visibility into these utilization and consumption patterns.
Good question. They need to understand it to address it.
Exactly. And Peter Anefsky, the CEO, acknowledged that they're relying heavily on data analysis,
Makes sense.
comparing to historical trends.
Data is king.
Right. But are they getting any anecdotal insights from, the actual users?
Yeah.
Anefsky mentioned their patient care advocates, the ones talking to members, aren't really hearing anything specific about timing or other factors. Conversations are mainly focused on, individual needs and navigating the journey.
Interesting. So not like people are explicitly saying, hey, I'm putting things on hold because of XYZ.
No, it's more subtle. And Anne pressed further, even brought up the recent elections.
Oh, wow.
Whether the conversation around reproductive rights might be playing a role.
Oh, that's a sensitive one.
Yeah.
What would Progyny say?
Anefsky played it cautiously, saying, hard to say definitively.
Okay.
They haven't heard anything concrete suggesting a direct link.
So not ruling it out, but also not jumping to conclusions.
Staying data-driven.
All right. What other insights did the analysts uncover?
Well, Alan Lutz from Bank of America,
Okay.
he focused on the financial implications,
Makes sense.
specifically the pressure on gross margins. He pointed out the quarter saw both higher investment in care management services
Okay.
and lower than expected revenue from ART cycles.
So kind of a double whammy.
Exactly. Increased costs and decreased revenue.
Never a good combo.
Right. And Livingston, the CFO, explained that those higher personnel costs, they due to hiring in anticipation of greater growth,
Oh, I see.
which didn't quite materialize as expected.
Gearing up for a bigger year and now having to adjust.
It seems that way.
Yeah.
And this led to a crucial question from Alan
Okay.
about what will drive gross margins in 2025.
$1 million question.
Right.
What's the plan?
Livingston admitted it's a bit early for concrete guidance for 2025,
Okay.
but reassured everyone that they're looking at, moderating their hiring to manage those margins.
Okay, so hold back on aggressive expansion until the picture's clearer.
Right, but there's another layer to this.
Oh, is there?
Client dynamics.
Right. Are they losing clients on top of everything else?
Sarah James from Cantor Fitzgerald brought this up,
Okay.
questioning the total number of clients and whether there were any significant account losses.
So not only lower consumption per client, but potentially losing clients altogether.
Adding fuel to the fire.
Yeah.
Anevsky clarified that besides one large client they publicly announced parting ways with, there were only 5 other losses.
Okay.
And he emphasized that there were no real commonalities among those departures.
So, not a mass exodus, which is somewhat reassuring.
Right.
But then Sarah raised a point that gets to the heart of their business model.
Okay.
Are employers looking for plans with, like, more moderate utilization trends?
In other words, are companies looking to control costs by, potentially limiting access to these expensive treatments?
That's a tough one.
Yeah, what did Progyny say about that?
I'm curious.
Anevsky was very firm, he said, and I quote, "I'm not sure sort of what type of benefit that is. Again, we wouldn't support that. Either you believe your employees need to benefit, and you believe your network and your network management and the physician new network are making decisions for appropriate treatment. But to restrict access sort of arbitrarily, we don't believe it."
Wow. They're standing by their philosophy of comprehensive benefits.
Even with these challenges.
It'll be interesting to see if that holds.
Absolutely. Lots more to unpack here.
Yeah. Welcome back, continuing our deep dive into Progyny's Q3 2024 earnings call.
Picking up where we left off, Progyny's facing some tough questions about their core business model.
Right, especially with those unexpected consumption trends.
Investors want to know, can they maintain that growth?
Even with this slowdown?
Right.
And how people are using those fertility benefits?
And Michael Cherney from Leerink Partners, he brought up a good point. The potential of those newer offerings.
Oh, right, like the maternity and menopause services.
Exactly.
Yeah.
Asking how those are tracking against their 2028 revenue targets.
Which, if I remember right, include a big chunk of change coming from those newer areas.
Exactly. And Anevsky, the CEO, said the initial adoption rate has been positive.
Okay, that's good.
Over 1.5 million lives covered by those additional services.
Wow.
But he also emphasized it's still early.
Makes sense. It takes time to build that awareness and trust.
Especially in sensitive areas like that.
Yeah.
He said, and I quote, "It's the utilization patterns of those benefits that will be what will be the progress that we'll see over not just the next year, but over the next couple of years."
Okay, so long game for those new offerings.
Yeah.
Makes sense, though.
Mm-hmm.
Now, Glenn Santangelo from Jefferies, he brought the conversation back to competition.
Oh, right.
Asking for some commentary on the selling season,
Okay.
what they're seeing out there. Competition is fierce,
Yeah, you got players like Maven and Carrot.
stepping up their game.
Right. And Glenn pointed out, Progyny signed a lot of their early clients years ago.
When it was less intense.
Exactly. So he's basically asking, are they feeling the heat now?
Now that those contracts are up for renewal.
Yeah, you got to defend your turf.
So is Progyny sweating?
Not according to Michael Sturmer, the president.
Okay.
He said they've been operating in this competitive environment for at least a couple years, have consistently maintained strong win rates.
So they're not backing down.
Bring it on.
Yeah.
He highlighted their success in landing some very large competitive deals this past selling season.
Okay, so they're holding their own.
Yeah.
But what about their overall growth strategy? Can they still achieve those ambitious revenue targets?
Well, with the consumption slowdown looming?
Mm-hmm.
Well, Glenn followed up, asking if it's reasonable to expect revenue growth in fiscal year 2025.
Given the projected membership growth.
Right, even if people are using the benefits less.
Shouldn't the sheer increase in members drive revenue higher?
Right, and Anevsky acknowledged that. It's a fair assessment. But
Definitely.
given the variability they've seen this year, the lack of visibility into new client utilization,
Be prudent to hold off.
yeah, on any definitive comments for 2025.
So, not ruling out growth, but not making any promises either.
Right.
That uncertainty around those consumption trends is still a major factor.
Definitely. And Jalendra Singh from Truist Securities, he wanted to get some clarity on that,
Okay.
asking if the situation had worsened since the previous quarter, if it was just a continuation.
Trying to gauge if this is a temporary blip or a more persistent problem.
Exactly. And Anevsky explained that while Q2 saw a slower than expected increase in ART cycles per user, Q3 actually experienced a decline.
Oh, wow. So it's not just continuing
Something they'd never seen before.
or getting worse. That's got to be making investors nervous.
No doubt. And this led Jalendra to suggest that maybe Progyny should consider a different business model, one that's not so directly tied to those unpredictable consumption patterns.
So basically, find a way to make their revenue less dependent on how much people are actually using the services.
Right. And surprisingly, Anevsky seemed open to the idea.
Really?
He said they're actively thinking about ways to mitigate utilization variability.
Okay.
but not much more to share at this point.
So at least acknowledging that their current model might need some tweaking.
Yeah, a potentially significant shift
It certainly is.
suggests they're taking these challenges seriously
And are willing to adapt.
to the evolving dynamics.
Okay, so we've got some potential changes brewing.
Yeah.
What other insights did those analysts uncover?
Well, Stephanie Davis from Barclays
Okay.
asked a really interesting question.
Yeah.
Whether there are any, underlying technological or medical advancements
Oh, interesting.
that might be contributing to this shift.
Like new fertility treatments that are more effective.
Yeah, leading to fewer cycles needed.
Or better diagnostic tools, to help identify the best course of treatment earlier.
Exactly. But Anevsky said they haven't heard anything from the clinics regarding those specific advancements.
Okay.
He did mention that a few clinics, particularly on the West Coast, have observed lighter utilization of egg freezing benefits.
Interesting. So maybe some regional variations,
Could be.
but overall, still searching for a definitive explanation.
Right. And knowing that Mark Livingston, the CFO, might not appreciate the question,
Oh.
Stephanie went ahead and asked if they're considering taking a more conservative approach to guidance for 2025.
Given the lessons learned from this past year,
Basically saying, hey, you guys missed the mark this year.
are you going to adjust your forecasting to avoid those surprises in the future?
And Livingston, ever the diplomat, avoided giving a straight yes or no answer.
Classic CFO, playing it close to the vest.
But he did say, and I quote, "I think we certainly learned lessons throughout 2024, but really about the variability that's happening within the business itself. And so what we're doing here this quarter is incorporating a greater emphasis on variability that we're seeing and a little bit less reliance on the most current data point to drive where we think those ranges should be set."
So a very carefully worded way of saying, yes, we'll be more cautious next time,
Probably the wisest approach.
given the circumstances.
Agreed. Now, Scott Schoenhaus from KeyBank, he wanted to dig into the details of their selling season,
Oh.
asking for clarification on this 6.7 million lives they've projected for next year,
Okay.
and whether there's any, particular industry or geographic concentration among their new client base.
So trying to get a sense of where that future growth is coming from.
Right. And Anevsky clarified that the 300,000 federal lives added this past year
Okay.
are still limited to consultation services, not full ART day cycles.
Okay.
He also said that their new clients span across a couple of dozen industries.
So no major shifts in their client profile.
At least not yet.
Well-
Any other key takeaways from the analyst Q&A?
I'm all ears.
Richard Close from Canaccord Genuity,
Right.
he circled back to those client losses,
Oh, right.
asking if there were any similarities
We're coming out
among them. Anevsky reiterated that besides that one large client, there were only 5 other losses, and that there were no real patterns or systemic issues at play.
So not a mass exodus, no specific red flags,
Good news.
but they still need to figure out this whole consumption slowdown thing.
Yeah, that's the big one.
Okay.
Richard also inquired about potential differences in utilization or consumption patterns
Okay.
among their newer health plan clients.
You mean those partnerships they've formed to
Exactly.
expand their reach?
Right. Michael Sturmer clarified that the health plans are primarily functioning as partners,
Okay.
helping them reach more employers,
Good.
and that they haven't observed any significant differences in utilization. Employers who come on board directly,
Versus.
those who sign up through a health plan partner,
So seems like those partnerships are working as intended.
without negatively impacting their core metrics.
That's what it looks like.
All right, we've covered a lot of ground here.
We have.
Gone through their financial performance
Basic responses, yeah.
and those insightful questions from the analysts,
And we've heard directly from Progyny's leadership
giving us a glimpse into their thought processes.
and how they're tackling those unforeseen challenges.
But there's still one big question looming,
Ooh, I like where this is going.
a question that goes beyond Progyny itself
Okay.
and touches upon the future of the fertility industry.
Right. Listeners, you'll have to stay tuned for the final part of our deep dive to hear that big question.
So it's David Larson from BTI who brings it up.
Okay, David, what's the big question?
He starts by referencing conversations he's had with some of Progyny's competitors.
Okay.
And he notes that, some companies are looking to offer much smaller benefits. Smaller, meaning,
Think like $10,000, $20,000, maybe $30,000 maximums,
those numbers sound,
which in the world of fertility treatments
yeah,
doesn't go very far.
right. Those numbers sound pretty low when you consider the cost of IVF and other procedures.
Exactly, and that's the crux of his question.
Okay.
Are employers trying to cut costs by offering these limited benefits? And if so, How does Progyny, with its commitment to, comprehensive coverage, respond?
That's a tough one.
It's a balancing act
Between meeting market demands, yeah.
and staying true to your mission.
Right.
Larson really puts Progyny on the spot.
Okay.
He asks, and I quote, do you have a product or a program that can accommodate something like that? And then maybe how you want to describe it, upsell them or grow the product over time.
So basically challenging them to adapt.
Right, like, hey, if the market's moving this way, can you play ball?
Can you play ball?
And Onefsky's response is fascinating.
Yep.
He doesn't shy away.
But he also pushes back on this notion that these smaller benefits are truly sufficient.
Makes sense.
He points out that, like, a $10,000 maximum wouldn't even cover a single IVF cycle in most cases.
Right, barely a drop in the bucket when you look at the overall expenses.
He argues that these limited dollar amount benefits are ultimately inequitable.
Okay.
He says, and I'm quoting again, so mathematically you're not going to get there, right? And so the clients that are buying our benefit understand that an arbitrary dollar maximum benefit is an inequitable benefit.
So he's sticking to his guns, emphasizing the value of that comprehensive coverage.
Yeah, but he also hints at some flexibility.
Okay, I like it.
He says, and so sort of the upsell concept is a good one, but we have an offering, and the offering is, if you want to do a one-side benefit, you could do it, but having a dollar maximum, we believe, is not the right way to do it.
So maybe there's some wiggle room there?
Could be.
Perhaps they'd be willing to work with clients who start smaller, but with the goal of eventually moving them towards a more comprehensive plan.
That seems to be the strategy.
Meet them where they are, but continue to advocate.
For that gold standard.
So that gold standard, exactly.
All right, so we've explored the financials, the competitive landscape, and now this philosophical debate about the nature of fertility benefits.
Yeah, what's the big takeaway here? What does it all mean for Progyny, for the industry?
Well, they're facing headwinds, that's for sure.
Definitely.
That drop in consumption has raised concerns about their growth.
Right.
And the pressure from competitors offering, those cheaper, more limited plans.
It adds another layer.
It's a classic dilemma.
Stick to your principles or adapt to survive.
Right.
Yeah.
But they're also showing resilience. Their selling season was strong.
That's fair.
They're expanding into new services.
Right.
Those health plan partnerships seem to be paying off.
So they're not down for the count, but they're in a fight.
They're in a fight.
Big question now is whether this consumption dip is temporary or a sign of something bigger.
The million-dollar question.
Yeah, is it the economy, societal trends, something else?
Who knows?
Will Progyny be able to navigate these challenges while maintaining that commitment to comprehensive benefits?
That's what we'll be watching.
Those are the questions we'll be watching closely in the coming quarters. And for you, our listener, we encourage you to keep an eye on these trends as well.
This is a dynamic industry.
It is. Progyny's journey is a reflection of the larger forces at play.
Absolutely.
So much to think about. This deep dive has definitely given me a lot to ponder. Thanks for breaking it all down.
Anytime. That's what we're here for, helping you cut through the noise and get to the heart of the matter.
This has been The Deep Dive. We'll catch you next time with another fascinating topic to explore.